Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back. You're watching Traders Corner, Summit's real-time, real money trading show. As always, we're joined by Garth McKenzie, who is, of course, the founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
I have to say it's a real in-the-money show, and we'll get to that at the end of the program. But we have done fantastically well, or rather you have. But maybe just comment on the general market as it stands. It's been quite choppy over the last couple of days. We had that sort of record-breaking run last week, and then it all seems to have unraveled somewhat. It
has a bit, yeah. You remember last week we spoke about the top 40 index, and we said that if it broke out through 32,400, that would mark a breakout through some short-term lateral resistance, and that could then open the potential for a move to 33,500. Now, I still think that analysis is valid, but we had that sharp push higher, and now over the last 2 days or so the market's actually been rather lackluster, and it's been pulling back a little bit, maybe consolidating some of that move. Certainly the volumes have been very thin. On both Monday and Tuesday we've seen volumes around about 30% lower than the average daily volume that we have seen for the year. So that gives you some sort of indication that there's a little bit of a lack of conviction either way right now. But broadly speaking, I still think the momentum is fairly strong with our market at this stage, and the trend is your friend until such time as you've proven wrong. So you know, I still do think there's buyers at the lower levels, and we probably will still see some buyers stepping up to if the market gets hit any harder than this.
Okay. Well, how's that share, the most recent trade for the portfolio, PPC, working out in the context of what has been a rather uneasy market?
It's actually working out fine for us. If we have a look at it, the chart of PPC is up on the screen at the moment. What I'd identified last week was that the first and major, most dominant feature here in this chart is this large inverted head and shoulders pattern, which I'd identified, and you can see it labeled there with the head surrounded by the two shoulders on either side. And when the stock broke up through 28 Rand, that validated that inverted head and shoulders pattern, broke out through what we call the neckline of the pattern, and it came back and it retested it. We also had a nice steady uptrend going back to the July lows, where the stock found a bit of support. And then also we had the 50-day moving average, which was pointing upwards, and that also supplied a little bit of support to the share price. We then had this falling wedge pattern, which is typically a bullish pattern within an uptrend, and the share broke out to the top of that pattern. So all in all, it was looking good. If we take the height of this inverted head and shoulders pattern, that gives us the projected target. And in this case, you take the height, you project that up from where the share breaks out, and that gives you your projected target price, which in this case was 32 Rand a share. So all looking good. We went long at 28 Rand 70 when the stock broke out through the top of that falling wedge little pattern there, and then set a stop loss at 27 Rand 10, which basically meant a break. We would have had to see a break back underneath the bottom of that small little wedge pattern in order to activate that stop loss, and that hasn't happened at this stage. The share has moved up. It's been up to about 30 Rand and just above 30 Rand so far. So all in all, it is looking good. We are in the money with this trade, and I'm going to keep holding on to it for the time being.
Right, getting on to sort of this week's ideas, you haven't actually put on any new trades for the portfolio, but there are 3 shares that you've identified as shares of interest. Tell us a bit about them.
Yeah, as you say, we're not putting any new trades on at this stage. I want to just highlight these and put them on the watch list, as it were, for the week ahead. And these are shares that we might potentially trade in the week ahead. Also, just interesting to note that subscribers to the Traders Corner website now get a service called a week's watch list as well, where I'll publish the handful of shares that I'm basically watching and that look potentially as if they could be trading opportunities for the week ahead. So that is available to subscribers. And what we're going to do here is along a similar line of looking ahead to what's on the watch list for this week and what I might possibly look to trade.
Okay, well, you've got SAB Mill up, which has been, I suppose, one of the strongest shares on the JSE this year, and it's has been boosted by the Rand weakness.
Yes, absolutely. No, you can see it there going back about 15 months on this chart, and what you can see is that we've got a very well-defined upward trend over there. It is a particularly strong stock. It's fairly defensive in nature, and a lot of the defensive shares have done well over the last year or so. We've noticed over the last month or couple of weeks really that the share actually has been consolidating and pulling back towards that uptrend line. And you can see that there's support there, as indicated, about 360 to 365 Rand. The share has actually been down to 360 and tested that support on an intraday basis over the past week and seems to be finding a bit of buying interest at the lower levels. What also catches my eye here is the stochastic oscillator at the top there. Notice it's very oversold, first of all, but the other thing is that it's making what we call bullish reverse divergence. And we've discussed this on the show before. It actually was evident in the PPC trade previously now as well. Basically what it means is you've got a situation here where your stochastic oscillator is giving a more oversold reading on this pullback than what it did on the previous pullback, yet the share price is at a higher level. So you've got a lower low on your stochastic and a higher low on your share price. And that's actually quite a bullish setup. Generally speaking, you don't see these all that often, but when they do come around, they're normally quite high probability setups, and they normally give quite nice trading opportunities.
Which leads me to ask why you haven't actually enacted a trade in SAB Miller.
I'm wanting to just see if it gets down into that area again, 360 to 365. It's been trading up at about 368 today, so I'm hoping I haven't missed this one. But we'll watch it and see. Certainly, if I can get it on a little bit of weakness into that area where the support is, then I'll absolutely look to buy it. If not, I might need to pay up a little bit, but I've never been a big fan of chasing a share. I like to try and get it at the level which I particularly identify.
I suppose the risk to reward payoff isn't as great
That's
when
it.
you're sort of heading after the rest of the payoff.
Yeah, exactly. If you chase a share, then your risk reward ratio becomes sometimes can be disadvantageous, and that's what I'm wary of here. So ideally, I want to try and buy it on a bit of weakness, and that way our stop loss won't be too far away from our entry price. Whereas if I chase it, then the stop loss would have to be further away.
Okay. What about Discovery? That's a question that we had on Stockwatch last night, asking about the short and longer term prospects of this particular stock.
Yeah.
Why is it of interest to you, Garth?
Well, it's of interest to me because of the technical setup. You ask about the short and long term. I think the long term story for Discovery is still very exciting. They're growing internationally, growing into China and so on. So it's a very, very exciting business and arguably one of the best managed businesses that we've got in South Africa. But that's the long-term story. I think there's a great long-term case to be made for an investment in this stock. But in terms of the shorter term, if we have a look here, what we've got, I see, is the emergence of a triangle pattern starting to form. And it's debatable. You might say to yourself, either this is a triangle or possibly it's a head and shoulders, where we've got a shoulder, a head, and then another shoulder on the right here. So it's going to be interesting to see. It does depend on your bias. But the thing is that the trend has been upwards. And typically these triangle patterns are continuation patterns within a trend. And 2 out of 3 times they will break out in the direction of the trend. So I would put greater emphasis on the likelihood of this being a triangle pattern, where it'll ultimately break out through that top resistance line and then carry on higher. So how would I trade it? Well, I'll be watching it in the week ahead and looking for that support level at about 53.50 to 54 Rand, that sort of area. If I can pick up the stock on any weakness down to that sort of area, then I will look to buy it in anticipation that we're likely to see a break through the top of this triangle pattern. Of course, if I'm wrong, then I'll put a stop loss in place. And I would say in this instance, my stop loss would probably be a convincing move below 53, maybe 52 Rand 50, somewhere like that. But this to me does look good. I must say it's a stock I really like, and that pattern to me looks as if it is consolidating but gearing up for a potential move higher.
If it were a head and shoulders, if it's sort of that's the way it panned out, would it be potentially quite negative? And what kind of downside would you see for Discovery?
Yeah, if that did work out to be a head and shoulders and we saw a break out the bottom of that pattern, in other words below that bottom support line, then it could validate the head and shoulders pattern, and then I think you could see potential downside to around about 48 Rand. And there's a much longer term uptrend support at 48 Rand, so then I would possibly look to buy it down at that level. But for now it's too early to speculate whether that will happen. As I say, my bias is slightly more towards this being a bullish pattern and breaking out to the top side. But of course, if I'm wrong, we'll put a stop loss in place.
Yeah. What about the third one? It's Old Mutual. That's also had a fantastic run over the last few months.
Yes, it certainly has. Again here, what you can see is we've got a nice steady upward trend, and it joins all those lows. Every time that stock has pulled back towards that trend line, it's found support, and the buyers have stepped in and they've taken the price higher. So we've got a situation there where we have support now at about 23 Rand 50. So I think if we got down to 23.50, and I noticed that there was some evidence of buying down there and maybe a bit of a reversal off that support line, then I would look to get long of this stock for a continuation of that upward trend. The two of these stocks you will have noticed are currency sensitive, Old Mutual and SAB Miller. Both are pretty sensitive to the movements of the rand. And I still, from a couple of weeks back where we analysed the rand, I do still have a somewhat bearish bias for the rand. So I think there's a likelihood that you could find these stocks, both SAB Miller and Old Mutual, could do well in a weakening rand environment. So that's one of the reasons also, I guess, why I'm looking at those two.
Well, we've actually seen the rand weaken substantially today. I know that you said you might look to retrade the currency. Is it something that you are eyeing at the moment?
Yeah, I mean, I said that if we got a pullback to about 8 Rand 55, I would look to possibly then short the rand again, and it's come down to about 8.58, 8.60. So I suppose it got close enough, and I guess I could have enacted another short position on the rand from those levels. I haven't done it, but whilst the rand remains above 8 Rand 55 to the dollar, the bias is still bearish in my opinion, and I still think there's a chance that we'll go back up and see 9 Rand to the dollar once again at some stage before the end of this year.
Guys, before we talk about the state of the portfolio, which is very healthy indeed, and also your upcoming courses, do you think the market is looking to the midterm budget statement on Thursday? Because it has been quite quiet, as you suggested, over the last couple of trading days. I mean, is there any particular reason behind that? This is not a traditionally quiet time of the year, so why has there been a bit of reticence to trade? Yeah,
the thing is, it's been a bit quiet internationally as well. So I'm not sure that the medium-term budget policy statement is what's causing the lack of activity in our market at this stage. Typically, the medium-term budget policy the statement hasn't really provided much in the way of market-moving activities. So yeah, I mean, I don't think that it's a major factor right now.
Okay. Well, getting onto the state of the portfolio, talk us through how you've done in the last couple of weeks.
All right. Well, here it is. We spoke about the PPC trade earlier, and that's the one trade we've got open at the moment, and we're currently up 4,650 Rand on that. And then we've got a couple of our prior trades. We've got our Rand dollar trade where we did well. We've got our Naspers trade that we did nicely on. We've got our put spread option structure in the background. That's we're going to run that out right until December. So all in all, the portfolio has gone through that magical 400,000 Rand mark now. We're sitting at 403,565 Rand. So it's up 61% for the year to date, which is fantastic. So, you know, what's that, 153,000 Rand that we've got in the kitty to donate to charity come the end of this year. So it really is looking good.
You're going to try and double it, well, get to 500,000. Do you think there's any chance of that?
Well, it would be nice. We've only got a couple of weeks left, so I don't know that we'll get as high as that this year, but certainly I'll do my best.
Unless you abandoned all your trading principles and went for some seriously wild trades, but of course you're not going to do that.
No, because of course then the risk exists that we might give back some of these profits, and I don't want to do that either.
Okay.
So discipline, discipline, discipline.
Yes, it is quite tempting at this point to throw caution to the winds. Garth, to end off with, what are your upcoming courses?
All right, I've got another two coming up this year. I've got in Johannesburg on the 24th of November and in Cape Town on the 1st of December. They are slowly but surely filling up, but any viewers that are interested in attending one of those two courses are welcome to email me on garth@traderscorner.co.za, or you can also get hold of me on Twitter or on Facebook as indicated there.
Garth, great. We have to leave it there. Thanks as always for joining us.
Thanks.
That's Garth McKenzie, the founder and editor of Traders Corner.
Traders Corner was proudly brought to you by IG. Visit igmarkets.co.za to open a trading account today.